Today, I'm going to tell you how to make money in a bear market. So this is who I am. You can find me at mercenarygeologist.com. You find us on Twitter at Mercenary Geo, 51,500 Twitter followers. We have well over 7,000 subscribers to my free email newsletter. If you want my stock picks, you got to be a free email subscriber, but the price is right, eh? So, usual disclaimer, nothing I say today can be construed as an offer to buy or sell or go long and short any financial instrument. Seasonal trades for short-term profits. So there's a way to play this market, and I'm going to show you how to do it. So this all has to do with the seasonality of gold and the Toronto Stock Exchange Venture Index. So this is a seasonal plot of gold for 24 years, and what we do is we normalize every year, and it's from November 1 to February 28th. And because trading days vary every month, and especially during this time of year with holidays at all, we have to normalize by the number of trading days. So bear in mind that every 20 or 21 trading days is basically a month. So for instance, day 21 would be somewhere the end of November, 1st of December. Day 42, more or less, will be New Year's Eve. And then day 62, 63, maybe even 61 on some years would be February 1. So you can see the rise in the price of gold. And that's the red line, that's the composite, 24 years of gold, and you see what it did this year. So it lagged behind this year, somewhat unusual, but it's gained very quickly, and we expect the bullish price of gold to go ahead at least till the end of February. And this is the Toronto Venture Exchange, so from the same period of time. So if you look, we normalize at 0%. The market tends to go down during tax loss season, right? This is when people are selling stocks. And historically, that has usually bottomed on December 15th, plus or minus 2 to 3 trading days either side. So we first came out with this idea in 2016, and I wrote a newsletter on it. And nobody had ever done this before. Nobody had ever figured out. Well, we have this huge Excel database, something 45 megabytes, and we got all these parameters, and we do all this statistical stuff. And this is what we came out with. So it came out in the newsletter and said, buy stocks on December 15th and sell them the first week of January. So since I did that, there are a lot of smart newsletter writers, and they picked up on it. And I'm going to take full credit for it unless somebody can show me that they did this before I did it in October, November of 2016. And so what happened this year, if you look, the market bottomed on about November 15th, November 14th, 15th. And that's because people are smart and they're starting to front run with their tax loss selling. But regardless, you could still buy up to December 15th, which would be about day 35 on this trade. And you buy the stocks in. We buy during tax loss selling season. We're tax loss season buyers. So we buy as a contrarian philosophy. We buy when everybody else is selling. And we buy cheap, and we flip these stocks after the first of the year. And so this would be the index, and on average you would have made close to 10% on your money if you hit it close to the bottom. Or if you bought it in mid-November, you're making 15% on your money. Now that's the index as a whole. But now I'm going to show you, this is for specific stocks, and the philosophy is we want good companies and companies that have had high prices sometime during the year, and those people that came in at the top, they sell for tax loss season. So I'm going to show you some that it happened this year. Trilogy Metals. Now I covered Trilogy Metals, and we bought it in May of 2017 at 65 cents, and it went to $3.14 this year. And you'll see that in a year-long chart. But this is the chart from the 1st of November. It got knocked down to something on the order, what is that? About $1.75 in late November, even the 1st of December. If you bought it then, you could have sold it at $2.60 last week. So that's pretty good profit on a short-term trade. That's not the only one. So now what we're seeing is we're seeing dips again. So I would say that you could have bought Trilogy last week before it made this next pop. So you're buying these things on weakness, and you watch the volumes of them to determine when the major's selling. So you're buying when everybody else is selling. You make money in this market by being a contrarian. Here's Gold Mining Inc. And I do this. This happens year after year with Gold Mining Inc. So in mid-November, it got down to what, 95 cents, 96 cents. It hit $1.56 last week. 96 to $1.56 on a 4 to 5 week trade. That's pretty good return. Here's another one. I should tell you, I own Gold Mining Inc. I have a trading position and I have a core position. Illegal royalties, the stock we picked in February, two years ago on February 2nd, we picked this stock at 9 cents. And it's been as high as 47 cents this year. So if you look at the chart, you could have bought it at 37 cents 2 or 3 times in late November to early December, and it hit 46 cents last week, 45 cents. So less of a trade there, but still a pretty good arbitrage. 37 to what? 46 is 9 cents. That's 25% return on investment in what, 4 weeks? That's pretty good. Hannan Metals. This is the big winner this year. You could have bought Hannan Metals for 7.5 cents until mid-December. It's gone as high. Intraday, I think it hit 24. It's closed as high as 23 or 24, traded at 22 cents. So that's that's a 3-bag, a little less than a 3-bagger in 3 weeks. So pick good stocks and you do this and you can make money. Here's another one that I own. I do not cover the company. I do have a working relationship with them. So Chakana Copper got knocked down really hard by some rogue inside sellers or founders of the company. They knocked it down to 14.5 cents in mid to late November. That stock hit 25 cents right around the first of the year. It's gotten hit again by sellers, and it closed Friday at 18, 19 cents. It's been a low at 18 cents. I've got some stink bids on this. They haven't been filled, but they may get filled. But once again, a stock that's gotten knocked down by tax loss selling, and because of that, you can make short-term profits. So the real strategy here is twofold, and it has to do with the yearly seasonality of gold and the yearly seasonality of the Toronto Venture Exchange since its inception. So we'll go back to gold. And so this is a normalized chart for the entire year. And you can see that at the beginning of the year, realize we normalize at the beginning of the year. So you have this little run up till PDAC. That's interesting. until the 1st of March. You have a run up in the price of gold. End of February coincides with the venture exchange, and then you're kind of in the doldrums there, but you're particularly in the doldrums at the end of June, early July, the so-called summer doldrums. So you can buy gold plus July 1 plus or minus a week on almost any given year, and you can sell that gold at the end of the year, or better yet, hold on till the 1st of March. So you look from, you can make somewhere on the order, and I'm doing this on the fly here, normalized over the last 24 years, you can return something about 8% annual return on investment by buying and selling gold. Toronto Venture Exchange, interesting story here. So normalized once again at January 1 at 0%. You see the rise till PDAC. Day 43 is March 1. That'll be about the beginning of the PDAC. You sell your venture exchange stocks right during or right before or during PDAC. Then you leave the market be for the rest of the year. Look at the performance. Now it does hit an interim high right before the sell and may go away phenomena. That would be somewhere around day 80 or something like that. But look at the rise up, and we saw that in the 3-month chart from the middle of December to the end of the year. So here's the strategy there. Once again, you buy in middle December and you sell either in early January, you sell right before or right during PDAC. So those are the short-term deals. So how do we run this at mercenarygeologist.com? We run seasonal stock trading strategies. We buy oversold stocks during tax loss season, and we sell them in early Q1. And we generate time and time again, we generate incremental profits of 25 to 50% on average. You know, occasionally you'll find one you break even on and you exit that and go, okay, well, I might not do that company again. And so we have trading positions and we have core positions on stocks we like. So we have trading positions we do these seasonal strategies on, and then we have our core positions. And those are stocks that we hold for a longer period of time. We're looking for doubles in less than or equal to 12 months. And that's kind of a no-brainer, because I challenge you to find very many exhibitors out here that don't have a 52-week low and high of at least a double. Most of them way more. So the key is that you got to be a contrarian, and you buy them when no one else wants them, when they're at their lows, and you sell them when everybody's buying. You're selling into that volume. We call that the power of two. Double in 12 months or less. You sell half. You take all your money off the table. You preserved your capital. You take that capital and do it again. And while you're doing that, you still have half your position that you can trade on tranches, hopefully on the uptick, but you can sell on the downtick too. We sell both ways, because by that time you have zero cost basis. So you're playing with other people's money. I might even be playing with your money by that period of time, you know. But for every winner, there's a loser. And we try to do this trading because we think we know we can game the market, and realize this is what we're doing. We're gaming the market to generate profits. If you do the power of two twice, you preserved your capital, you've doubled your equity on paper position dollar value. If you do it 3 times, you've tripled. If you do it 4 times, you've quadrupled. That's why we call it the power of two. It's the trading philosophy. We've run I was introduced to this trading philosophy in 1992 by my broker at Haywood, Murray McInnes. Murray is still at Haywood. He's one of the founding brokers at Haywood, and he introduced me to this idea of when stocks double, you sell half and take all your money off the table. It's done me well now for, what is it, 28, is that right? 28 years? My God, am I that old? Yeah. Anyway, so this is a way to game the market. These are not buy and hold stocks. All these exhibitors out here, they all have a story, and their story sounds good. But these stocks are stocks that should be traded. There are no buy and hold companies out here, in my opinion. So this is a trading game, and we think we've found a way to game the market and make money on consistently, even during bear market times. Now, admittedly, like everybody else, we do better when there's a bull market, because high tide floats all boats. We know that. So, but we've done very well during the 6 year bear market for juniors. 7 year. We'll see if it ends this year. I hope so. Should always beware of frogs masquerading of princes. There's lots of frogs out there, but there are a few princes, and I'll guarantee you. So that's the biggest frog I've ever gigged in my life. It was 18.5 inches from toe to the top of his eyeballs, and that's actually my hand holding it. So anyway, folks, I run, once again, a free subscription service. To get my stock picks, to get my newsletter, there's lots of free stuff on it, but to get those things in a timely basis, you need to be a free email subscriber, and go to my website, look for my mugshot, sign up. We need a name, we need your name and an email address. I don't care, you can fake your name, but you have to give us a real working email address to get our stuff, and may all your trades be to the upside. Thank you very much.